Mr. Speaker, as the president and CEO of Job Creators Network, the voice of Main Street small businesses, which you know represent about 2/3 of new job growth in this country, I'd like to ask you to compare and contrast the differing small business tax relief approaches between the House and the Senate tax bills. As you know, it's a little wonky, but explaining the differences between the 9% and the 25% small business tax rates in the House bill versus the 17.4% in the Senate bill.
Yeah. First of all, the reason I recognize you on the way in, the Job Creators Network, they just dropped off at the Capitol today petitions of 173,000 businesses. Am I right? Was it 100?
That's right.
173,000 small businesses sent petitions to Congress that were arrived today saying, please pass this bill. Get this done. You know why? Because small businesses are where we get our jobs in this country. That's where economic growth really comes from. And they're really stagnating. They're really struggling. We're seeing more businesses go away than we're getting in this country these days. And so what this bill does, of all the things we're trying to do, is increase small business job growth. So as you mentioned, the House bill says for small businesses, let's drop their tax rates to 9%. Not 25%, not 15%, drop their tax rates to 9%. The Senate bill has a big drop in their rate as well, but not quite as big of a drop. And here's basically our theory. We say to a small business, you can expense your plant and equipment, your investment in your business. You can write that off in the year in which it takes place. And then on that net income, you pay a 9% tax rate. So what that does is it especially helps those new and young starting businesses. If you're a millennial coming out of school and you want to start your own business, this helps you do that because you have to cash flow positive, then pay taxes. So you can write off that investment in your business. And then when you start making some money, you're not going to get hit with a 25% tax rate. You'll get hit with a 9% tax rate when you start making money. Why do we want that? Because we want more small businesses to succeed. We want more small businesses to grow. And we know that most of our jobs come from small businesses. That's where the job creation comes from. And you get more small businesses growing, more jobs being created, it brings everybody's wages up. And that's the entire purpose of all this.
But if I could boil down Alfredo's question, I mean, the difference between the House and Senate, there's a lot of people saying, well, which horse is getting to the finish line here?
Yeah, so I didn't want to get too complicated, but both bills are designed to bring the top rate on small businesses down to 25%. The small businesses, successful small businesses, will pay a rate above 40% today. I mean, it's crazy. Look, overseas, where I come from means Lake Superior. The Canadians, in Wisconsin, we compete against Canada all the time. Canadians are taxing their businesses at 15%. Ireland's at 12.5%. England's going to 17%. China's between 15 and 25%. The average tax rate on businesses in the industrialized world, the world we compete with, is 22.5%. The tax rate on our corporations in America is 35%. That's the highest corporate tax rate in the world. But the tax rate on our successful small businesses is even higher than that. It's over 40%. So here's what's going on. We are losing in global competition. American businesses are fleeing our shores and going overseas. The biggest company we used to have in Wisconsin, headquartered in Wisconsin, was a company called Johnson Controls. It's really nice. It's about 66 degrees in this room right now. It's not so hot with the lights because it's probably a Johnson Controls thermostat that's controlling the heat here. But that company is no longer in Milwaukee, Wisconsin, its headquarters. It's now an Irish company because they moved their headquarters to Ireland, so their worldwide tax rate's 12.5% instead of 35%. This is happening. Burger King is no longer an American company. It's a Canadian company. I can go on and on and on. So the point I'm trying to make is when you tax your businesses at much, much, much higher tax rates than your foreign competitors tax theirs, they win, we lose. And we're losing jobs. We're losing companies. We're losing headquarters. They're moving overseas, or foreign companies are buying U.S. companies. And so what we're saying is let's get that tax rate from the 40s down to 25, no higher for small businesses. But then we say for those smaller small businesses, the ones that are the mom and pops, the 2-3 person businesses, bring those rates down to 9%. The Senate bill doesn't go that low. The Senate bill says let's get down to 25 and no higher than that. And people will make, as they make money, they pay lower tax rates up to that 25%. We just go down from, say, in the Senate bill, I think it'd be 12% in the Senate bill and 9% in the House bill. Point being, we both acknowledge you've got to get tax rates down in our businesses because we're losing in global competition, and especially small businesses. That's where our jobs come from.